Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be doing a macro analysis. I'm personally feeling a little bit suspicious, you could even say bearish, on both the cryptocurrency and equity markets at this point in time. There are definitely a few indicators, both from a technical and fundamental perspective, that are leading me to believe that we'll probably see some more downside ahead. So I want to give you guys some of my price targets, talk price action on a few of the bigger players across the financial markets that I'm keeping an eye on personally, and also talk to you guys about how I'm personally hedging my portfolio in the case that we do see more downside ahead. As we always say, there's always a bull market somewhere, even if that bull market may be in shorting plays or hedge positions. So we'll talk a little bit about how I'm hedging once again, and again, talk price action across these names today. So let's go over a few of these names, and then we'll dive into each one individually. In front of us, TradingView, where once again we will talk technicals, price action on price targets on the following, kicking it off with the king of the crypto markets. We can't not. Been talking so much about the crypto sector here on the channel that we have to kick it off with Bitcoin. So we'll talk Bitcoin. I'm sure you guys assume this as I've been talking. You guys can see my downside price targets. I do think we will see more downside ahead in Bitcoin. Got the evil twin sibling of one of our favorite patterns here, the bull flag, which is the bear flag. So on the short term, you guys, I'm seeing a bear flag playing out. I do stand by my analysis from yesterday's video, along with the fact that, once again, it's very rare you see an asset fall off a cliff. You'll see the dead cat bounce, and it's rare you see this not followed by another sell-off or dump to the downside. So again, there are multiple factors, both technically and fundamentally. We can talk about all the other things going on in the ether, just so much hot capital flying around in the markets that lead me to believe things are looking a little toppy in the short term. But once again, I will try to validate these price targets for you. Again, we'll kick it off with Bitcoin, and then we'll move into equities. So we're kind of just keeping it, once again, macro here, keeping it from a bird's eye view, not going into too much specifics today, I guess, aside from VIXY. But kicking it off with Bitcoin, that will kind of sum up my thoughts around the entirety of the crypto sector. We'll cover the S&P after that, or the SPX, that is the S&P500. I know you guys, there's a Dow Jones, there's a NASDAQ, triple Qs. The S&P, I feel like, is the middle ground between those, and that's what I choose to play, especially because we're going to be talking about VIX. So we'll talk about the S&P 500. That will sum up my general thoughts around equities. So Bitcoin for crypto, the S&P 500 or SPX for equity markets. We will then cover the DXY because, of course, most of the time, not right now, which is kind of weird, it's kind of strange, but most of the time, almost every asset that trades against the dollar, which is pretty much every single asset on the planet, is going to be inversely correlated with the DXY. So if the DXY is going down, it's likely that everything else is going up. And because the DXY has been falling off an absolute cliff over the course of the past year or so, that's why we've seen the equity markets, Bitcoin, appreciate so much in values, because money keeps being printed. And of course, it's all a matter of supply and demand. The more money there is out there, the more valuable other assets become. So from a fundamental perspective, I just want to say this right now. I'm very long-term bullish on Bitcoin. I remain bullish. Everything I've said about Bitcoin in the past, I stand by. It's the most absolutely, if not arguably the only absolutely scarce asset on this planet that is digital and at that scale. It will serve a purpose 100% in the future of our financial markets. But again, corrections are healthy parts of every bull market. We are looking a little overextended right now. Again, there are a lot of fundamental factors at play right now that make this seem pretty toppy right now, especially because there are some technical indicators as well that have been broken, some lines of support that have been broken. So again, I'm seeing downside. The DXY does look bad, but again, fundamentals do come into play. Technicals don't always run the market. They definitely play a very, very significant part, especially in 2021. But we'll take a look at the DXY. Although it looks bad on the charts, I'll talk to you guys about bull scenarios I see playing out there. If the dollar, from a fundamental perspective, does start to appreciate again. And then we will talk about those hedges that I mentioned a little while ago. So the VIX, or the CBOE Volatility Index, is inversely correlated to the S&P 500, which means kind of similar to DXY. So if the S&P is going down, that means that the VIX goes up. Okay, so that's what it was designed for. When the S&P goes down, when the equity markets go down, the VIX goes up. And we're not actually going to be taking a look at the VIX itself, but we are going to be looking at what I'm trading personally to kind of capitalize on the movement from the VIX, which is VIXY. VIXY is a short-term ETF that is based around the VIX, so we will look at that. The price is very different, but VIXY is looking good on the charts right now. Shout out to Newsletter Portfolio. We have gone in on I've gone in on VIXY. I've talked to you guys about VIXY, and I do see a lot of upside potential for VIXY if things play out the way I expect them to over the course of the coming days, weeks, maybe even months. Okay, so Again, get into price action, give you guys some price targets. We are seeing some red as we're making this video, but that's all right. That's why Bitcoin's really fun to cover, is because it's a 24/7 market, all right? Before we do dive into the charts, I will ask you guys, as always, to please give the video a like if you do go on to gain value from it today, or if you're feeling the same way as I am, even if you're not, I would appreciate a like, or give it a dislike if you don't agree with anything I'm saying. But if you do dislike it, if you don't agree, please let me know in the comments why that is, what your justification from, like, rational justification. I know everyone thinks they're rational, but please do your best to rationally justify the reason behind you not believing we will see more downside. If you're still a bull, that's great. You guys know that for the far majority of the time, I'm an optimist. But as of right now, you guys, if you've been tuning the channel for a while, you know that I pretty much built my career off playing bubbles, whether it was cannabis or biotech or crypto multiple times. What we're seeing right now is very reminiscent of all the bubbles, of all the tops of the bubbles that I played in the past. And again, I do think there's more room ahead for growth, especially in crypto. It's still such a young industry. But if you're talking about short-term rallies, and we've definitely seen this short-term rally, it's feeling a little bit toppy right now. Okay, so let me know down below if you're still bullish. That's okay if you are. Just let me know why. And subscribe to the channel if you're new around here, want to catch more content like this. And last but not least, check out the Complete Portfolio daily newsletter. That is first link in the description, $15 a month. If you want to know exactly how I'm trading this current market environment. Again, if you're a bull, this might not be for you, but I'm feeling a little hesitant right now. As I said in the beginning, there's always a bull market somewhere, so that's why I'm doing my best to capitalize on these hedge positions. Plays like VIXY call, like certain calls on VIXY, certain put options. There's one specific put play. Again, shout out to you guys, you know exactly what I'm talking about. There's one specific put play or short position that I'm very, very excited about right now. That looks very promising. So if you guys want to know exactly what calls, puts, stock positions, how I'm hedging my stock portfolio, crypto positions, what I'm doing there, again, I update this every trading day during market hours, and along with every update, I send out an email newsletter rationalizing my thoughts, explaining why I'm trading the way I'm trading. So once again, if you guys are interested in that, first link, $15 a month. Really means a lot if you check it out. But if not, as always, no worries. Let's dive into these charts. So Bitcoin, right now, we're going to be focusing on the short term, and then we'll zoom out. You know what? We'll just hop into the daily candles for pretty much everything except for the VIXY after we talk about the short term on Bitcoin, because I think this is very important, okay? So Bitcoin, again, short term, we have broken support. So we broke short term support. That started back here. We'll get rid of these. This is just these little images are just for pretty much presentation as we do the intro. Okay, so Bitcoin has broken short-term support, set a high at almost 65,000 in mid-April, not too long ago. And again, you guys, the higher we climb, when you look at this is actually pretty sideways price action for a while. Volume has been diminishing. This seemed obvious. I did think there was another run in store. Many of you guys know that. Again, if you've been keeping up, before we broke this, I was actually very confident in the fact that we would see one more rip up because the fundamentals are so strong. But again, the fundamentals, the Dogecoin thing is happening right now. I'm not going to get into that again. I feel like I got a lot of dislikes on yesterday's video because I roasted Dogecoin, but I feel like Dogecoin is the perfect example, not only in crypto, but in equities as well. And that kind of plays into my theory that the Fed will probably stop injecting money into the capital markets. You guys, it's important to understand that, like, as we talk about the DXY as well, again, this is a macro analysis. This is everything. The entire financial markets is one big ecosystem. And the primary thing that has pumped up the entire markets over the past year is the printing of money and the Fed buying up assets, like it literally inflating the markets with printed capital. And when you see things like Doge happening from a fundamental perspective, that is like the epitome of too much rampant capital just floating around in the ether. There's too much hot capital in the markets. That's just again, like, popping. Bitcoin, you can say Bitcoin's a bubble, but Bitcoin actually has fundamental tangible value. It's the most scarce digital asset, absolutely scarce digital asset on the planet, and it will always serve a purpose. It will one day eclipse gold, in my opinion. But Doge, like something like Doge, is just literally a meme coin, and it's important to understand that. And I have heard that, like, obviously it's crossed my mind, if money starts to flow to Doge, will you just convert that Doge to Bitcoin? In all honesty, you guys, maybe Doge runs up more, but I think there's going to be a lot of capital that is just kind of obliterated. There are going to be some whales who make a lot of money, but I think a lot of capital is going to be obliterated from the Dogecoin market cap. I think a lot of new retail investors are going to experience their first bubble burst. We've all been through it. You will be through it. It will teach you life lessons if you are going to go through that. But again, I don't know if it's going to cycle back into Bitcoin because Bitcoin does not look good technically. So those are, again, I just wanted to spit out some of the fundamentals because I did mention that. I didn't just want to leave you guys hanging with kind of nothing to go off of when I said fundamentals. But let's talk technicals right now. Okay, so Bitcoin, again, broke short-term support. This orange line right here, very, very obvious. After we broke that, fell off a cliff. We are currently printing a bear flag. Again, evil twin sibling of the bull flag. And it makes sense to me. So bear flag, obviously, again, an inverse bull flag. Here's the flagpole. Here's the flag itself. Sharp move down, followed by, I guess, an ascending triangle. In this case, or kind of just a symmetrical triangle. Regardless, it is printing a bear flag. And again, you guys, I've played so many bubbles. When you see, and I played Bitcoin, this is exactly like Bitcoin does this way more often than not. If you see a sharp move, if you see Bitcoin fall off a cliff, a big old red candle like this, you usually see this dead cat bounce, maybe go sideways for a little bit, ultimately followed by another very, very sharp move down. So I think this bear flag will resolve itself, obviously, in another move down. My price target for Bitcoin, let's go to the daily, and then we'll move into the other charts on the daily candles as well. So my price target for Bitcoin is to test ultimate support. I don't remember what it was. It was probably around here somewhere. I did think it was likely that Bitcoin was ultimately going to come down here because we saw two rips up, and usually, I don't know. I just thought somewhere around here, it was about a month or so ago, I guess, that I did think Bitcoin was ultimately going to come down and test support, test its previous high. So it would make sense to me that Bitcoin ultimately will come down to test this line of support right here. Let's move this guy quick. If this plays out, again, it's usually followed by a sharp move down, so I think this could play out fairly quickly. That would take us down to about $46,800. Conservative price target for Bitcoin, as I just said yesterday, so I'm sorry I'm repeating myself, but got to keep you guys posted on my thoughts. I think this bear flag will be resolved to the downside. My price target for Bitcoin short term is going to be about $47,000. If we do break that, if we do break support, which is going to be very, very significant, I think it's highly likely that we ultimately come down to test the initial high of this rally set at the beginning of the year. So this initial high right here of the rally, that is TA 101 as well. If support's broken, I think it's very, very likely that we will execute a very, very common technical pattern in a rally and come down to test the initial high of the current rally. So that would take us down to about $42,000 as betting man. That's what I would expect personally. Again, maybe we bounce off 47. The fundamentals are strong. I mean, Venmo just allowed people to buy crypto. They're joining the PayPal. I mean, Venmo is owned by PayPal, so it's not surprising at all. But again, there's a lot of buy the hype, sell the news. There's just so much going on in the ether that I even can't dive into right now because I don't want to waste your guys' time. But I do believe there's more downside ahead. I think a lot of people are going to be expecting a bounce off support. We'll definitely bounce off this support. There's almost no question of that in my mind. But I do think we're probably going to break it and ultimately bottom out around 42K, go sideways for a while, rebuild that investor sentiment, regain that steam in the markets prior to initiating that next wave up, okay? So that is going to be my price target. Ultimate price target for Bitcoin is going to be about $42,000. Medium term, I'll say, because again, short term, I think we'll come here, bounce up, maybe bounce up a little bit, but I do think we'll ultimately come down to test the initial high around 42K. So that's Bitcoin. It's kind of the same thing applies for the crypto markets. I know Ether is looking pretty good right now, but we're not going to look at that. If Bitcoin's going down, it's pretty likely that Ether goes down as well. But again, you guys, there are always bull markets somewhere, whether it's going to be EVs, cannabis. This capital is going to flow somewhere. Where that is, I don't exactly know. Let's hope it's some of the plays that we're very interested in around here. But again, that's why it's very important to hedge, which again, we will get into with VIXY at the very end. So this is the S&P, you guys. Again, as soon as after this, again, we're going to look right at the dollar. And this shows how inversely correlated the dollar is with the S&P 500 or just the equity markets in general. Again, I'm using the S&P just as the one I personally use the S&P as my equity market indicator, okay? So again, this line right here, I'll talk about this as well because this is an absolute worst case scenario, which is very, very bad and very, very unlikely, but we can cover it just because it's still a scenario. So I'm sure I really don't have to explain much here. We'll talk about the short-term price targets I get, and then we'll zoom out again, okay? So short-term, I think it's very likely that at least the S&P comes down to test this initial high prior to this really strong breakout. This happened. This breakout was initiated just almost a month ago now. It's crazy how fast time is going, almost through April. But initiated almost a month ago. Since then, we've pretty much just been ripping up. Kind of same principles that we were just talking about in Bitcoin, you guys. Again, on a rally, it's very, very common for a pullback to find a floor on the initial high of that rally. So very short-term rally. Again, high right here. It only makes sense that we'll probably pull back to at least here. If we do break below that, and there's also a line of support right here that's going to be very crucial to look at, which is that right here. So if we break that, this would almost perfectly coincide. If we do break this and then break this line of support, it is very, very likely to me that we'll ultimately come down to test this initial high. You see a lot of support, a lot of resistance, a lot of support around here. Kind of see a double top pattern happen right here. Prior to, again, the fundamentals of just ultimate money printing kind of catalyzing these big moves up. It would make sense for me to it would make sense to me if the S&P or if the SPX breaks, let's just say 3,900. So we'll I mean, I guess by the end of the month, if the S&P breaks 3,900 just to play conservatively, I think it's very likely that ultimately we will come down to test this very, very extreme high. Again, since right here, you guys, we haven't really seen a significant pullback in the equity markets. And again, don't fight the Fed, all that, but once again, I do think the Fed is going to ease up. I do think capital is going to start burning in the markets. I do think large money, I do think whales, I think hedge funds are going to start shorting. And when that happens, all calls are squeezed because ultimately the whales will still dictate ultimate general direction of the markets. Although there's so much retail, the whales still rule the markets. So that's important to understand. And if the whales are bearish, it's likely that we see a significant pullback. If we do break 39 once again by the end of this month, I think 36 is on the way. If we do break 36, if we break below that, my ultimate low side price target for the S&P is to come down and test, because we actually haven't really seen a strong test of this, which is the initial high prior to the Black Swan event, the everything absolutely melting, the liquidity crisis last year when everything fell off an absolute cliff. Okay, so that would take us down to about $3,400, like $33,500, $400, $3,400 on the S&P 500. That's a pretty significant price. That's a pretty significant pullback from here. So let's quickly do a price. Where's the price range? Price range right there from where we're at right now, around 41.5 to here would be about an 18% correction in the SPY. So just call it like a 20% correction. Worst case scenario, because I just talked to you guys about that, is going to be to test the bottom side of this massive megaphone pattern. So again, dating all the way back to January of 2018, the SPY has actually been in a consistent downtrend. This is highly, highly, highly unlikely. Again, just because there's still so much capital out there, unless there's a extreme amount of capital that melts. There's another Black Swan event. Again, maybe something absolutely just goes ballistically wrong. Then maybe we come down here. Again, it's very, very unlikely. But worst case scenario is going to be we come down to ultimately test this very significant line of support on a massive megaphone pattern. And that would take us down to, I mean, that would cut us in half. So that would cut us in 50%. Again, very unlikely, but I just wanted to show you guys that because I had mentioned it and I saw the line in the corner. I want to talk to you guys about what that was. Let's move on to the DXY. So the dollar, again, let's actually go back to the 4 hour here, talk about the short term because I want to show you guys what the dollar's been doing in my eyes. So the dollar playing out a shorter term megaphone pattern, okay? So again, megaphone, very obvious why it's called that. Megaphone, just branching out like that. So high highs, low lows, highly volatile. So the dollar has been in this megaphone pattern pretty clearly since it broke support. Ultimately came up here at the end of March, tested the line of support, the line of resistance on the current uptrend on this megaphone pattern. Unfortunately, did break below the support on that uptrend right there, which is when we absolutely fell off a cliff. And it would seem like, again, just using that same megaphone battle, like this is a very obvious chart just looking at it, right? So it would make sense for the dollar to ultimately come down to $89 to test the bottom side of this megaphone channel. That said, if the equity markets start to turn, if things start to turn, if the dollar does become more scarce from a fundamental perspective, again, fundamentals will always, like a strong fundamental base will always trump the technical argument, okay? So when things are good, technicals are very, 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 very in play. But again, during Black Swans, like we saw the S&P fall off, everything last year fell off an absolute cliff because of a fundamental catalyst. So if we do have kind of a fundamental catalyst like that, if the equity markets really do see a pullback, if there's a lot of shorting in the markets, yeah, Bitcoin's pulling back right now, so I do think we're definitely going to pull down. That would be the fundamental catalyst to lead the dollar to ultimately come up. And it would make sense as well, like May 3rd, over the coming weeks, if the dollar starts ripping, to test this previous support, TA 101 right there as well. Test previous support as new resistance. That would also perfectly coincide. That's why I say May 3rd. I'm sure you guys assume that. That would also perfectly coincide with the top line of resistance on the megaphone channel. So maybe we see a reversal right here. Again, everyone's expecting us to test support right now. Again, markets are great at throwing curveballs. So just expect what might happen either way. And again, just be prepared, stay on your toes, which is where the VIXY comes in. So let's close it out by talking VIX. Again, VIX, CBOE, Volatility Index is what everyone watches. But VIXY is an ETF that follows, so specifically the ProShares Trust 2 VIX Short-Term Futures ETF. So the VIXY has gotten absolutely demolished since its high, but let's zoom out here and talk about what happened during that Black Swan event to kind of preface my just general fundamental argument for the VIXY. So this shows very, very well how inversely correlated the VIXY specifically is. Once again, that's exactly what it was built for, so it makes perfect sense. How inversely correlated the VIX is to the S&P 500. So when the S&P fell off the cliff, this is exactly when it started falling. And it's also when VIXY went on an absolutely parabolic rally. It went from about $10 to a high of $65. So again, that's a 488% increase, like 6.5x right there, which is obviously very exciting price action, especially if you hold the right calls. And again, since then, we pretty much just been falling off a cliff. Dollar started being printed. There was a lot of helicopter money. And again, the more the dollar is, the more the dollar goes down in value, the more everything else that trades against the dollar will go up. And that's why the VIXY has been going down, because as you guys know, everything else has been going up since that massive crash back in March of last year. So again, this just shows, I just wanted to zoom out to show you guys the potential of what VIXY can do in a Black Swan event. I think it's unlikely we see another Black Swan event, but this just shows you what VIXY as an asset, like this specific ETF, is capable of if we do see some continued, again, downside volatility in the equity markets. So again, since then we have been in a downtrend. I do want to focus more on the short term here because that's what's more important to me. So we are on the 4-hour candles instead of the daily candles. The VIXY just today, this is exactly what I wanted to see. So the VIXY has broken a very significant short-term downtrend and is now in a technical breakout. You can see since its high here at the end of January, the VIXY has been falling off an absolute cliff. Touch point here, creating the line of resistance on the downtrend. Very strong resistance. It did break out today, and it is currently, if we zoom in here, you can see TA 101 broke resistance, came down. It's dancing perfectly on top of this line of resistance. I would expect the VIXY to use this now as a line of support. But again, I think it's very, very likely that VIXY ultimately breaks back into this massive megaphone. So we're looking at a lot of megaphones today, but this is a very, very exciting megaphone pattern. So I want to show you guys what I think could happen here. So first things first, I think VIXY, now that we've broken out, now that we are in a short-term breakout, I think it's very, very likely that VIXY ultimately comes up to at least $10. That would use, again, previous support on this megaphone channel as a new resistance. I think we will see some resistance around $10. That's like a 20% increase from $8.50 where we're at now. So that's very, very exciting price action right there. So I do think we'll at least see like a 20% increase up to $10, maybe see a little bounce right here. But if we can break $10, if we can break back into this megaphone channel, just say by the end of the month, over the coming week or so, then I think it's likely, especially if, again, the equity markets do see some more carnage. If we do come down to that red line we saw in the SPY in a very fast manner, then I think it's very likely that VIXY ultimately could, excuse me guys, I'm talking a lot, could ultimately come up to test the top side of this megaphone pattern. Again, very, very, very optimistic. I think at least just looking at general kind of where VIXY has spent a lot of time, VIXY has spent a lot of time around here. So I do think that we will probably see some resistance around $14. Again, just looking at this again, you guys, double top right here, pretty much dance right on $14 for us the span of like an entire month or so. So again, we'll probably see some resistance around there. Every time you look at the charts, guys, just look for areas like that. Look for historical ceilings and floors, because those will likely come into play again. Again, I think we can break $10, probably rip up to 14 if all goes accordingly, and probably see some resistance there. If we break like 15 bucks, if we can break 15 bucks, I think we're probably on our way to test the top side. Again, this is all completely reliant on the fact that on whether or not, I should say, if the S&P 500 does pull back more. But always know, guys, my money's on what I'm saying. Again, if you want to know exactly what call options on the VIXY I have out right now, how I'm trading the crypto portfolio, what I'm doing in my stock portfolio, what put options I have out right now. Again, I was pretty excited about a specific play in the put options portfolio. Again, check out the complete portfolio daily newsletter. Please let me know down in the comments what you think about everything we talked about today. Let's take a look at Bitcoin as we close this out. Bitcoin, again, it's falling off an absolute cliff right now. I think it's super likely that we're going to come down and test $47,000 at the very least. Again, you guys, I love Bitcoin. I know a lot of people don't like to hear the bearish argument, but again, you guys, it's just that's how the markets are sometimes. You get thrown curveballs, you adapt, or you get slapped. All right. So let me know down in the comments below what you think about Bitcoin, the equity markets, the dollar, the VIXY. If you're trading the VIXY, please let me know what you're doing personally and what you're excited about personally. Again, there's always a bull market somewhere, so let me know what you're bullish on. Let's close it out on an optimistic note. So I'll see you guys down in the comments. And until next time, always remember, take action, make waves. Peace.